Hi, I'm James Nelson. I'm principal and head of Tri-State Investment Sales for Avison Young. We're a global full-service real estate company with 120 offices around the world, but my specialty is the New York City market. We just released our year-end report, and we have a lot of exciting news to share, and that we finally were able to experience some of this pent-up demand that has been building since COVID in 2020, where the market was certainly depressed. Here are investment sales. Let me first clarify how we characterize those sales. These are multifamily, office, retail, and land sales above $5 million. So that's the market that we track for the 5 boroughs here in New York City. And unfortunately, 2020, with the onset of COVID, our market was certainly affected. The amount of sales ended up being cut in half from 2019, and even into earlier last year, the first quarter of 2021, we saw the lowest amount of sales volume since the depths of the financial crisis in 2009. Late into 2020, there was very little sales activity because by then, of course, the vaccines were on the way, and I think a lot of sellers said, look, we're not going to sell at this point when we can finally see a light at the end of the tunnel. And, buyers, meanwhile, were still, trying to see if they could find some bargains. And so there just wasn't that much sales activity. So fortunately, the second half of last year really came roaring back in an exceptional way, and especially the fourth quarter of last year. So for the fourth quarter of 2021, New York City had $9.1 billion in sales volume. This was almost triple the trailing 4-quarter average. So we ended up the year with a little over $15 billion in sales. Now, this is still, a far cry from, the peak market in 2015, where there was $68 billion in sales across New York City. Although, we're starting to recognize that year may never be replicated. So we look more at the 10-year average, which is about $36 billion. So we still have a lot of room to go. But once again, it was a huge pickup in activity. And when you look at the number of sales, that was also very dramatic, maybe not as pronounced as the dollar volume increase, but there we were looking at an 81% increase over the trailing 4 quarters. For last year, there was a total of 502 investment sales in New York City. The 10-year average is 1,026. So we were only about half off the 10-year average, and really consistent growth once again across the various boroughs. So now I think what I'd like to talk about is looking at each of the asset classes and how they're performing. And so for Manhattan multifamily sales for the fourth quarter, there was $1.4 billion in trades. This was almost double the trailing 4 quarters. There was 46 sales. Cap rates we've seen have been compressing. So once again, when cap rates compress, that means that values are increasing. So the average cap rate in Manhattan for the final quarter was 4.69%. Price per foot went up 4% to $738 a foot. Next, we'll talk a little bit about the retail sector. So in the fourth quarter, there was over $500 million in trades across 16 transactions. We saw the average price per foot up over 50% over the last 4 quarters. That being said, I always say that when we look at these price per square foot averages, that think of this more as a barometer, because what we're doing is we're averaging high street retail sales to side streets that sell. I think kind of what's a better indicator is the average cap rate that these properties are selling at. So we saw an average cap rate of 5.19% for the trades that took place. Still a great opportunity to get some yield here in New York. Looking back at 2015, the average cap rate for a retail deal was not too dissimilar from the multifamily returns. Here, the average was 3.69% back in 2015. Interestingly, a lot of the sales that I've mentioned up until now have been domestic buyers. We did see a big return of the domestic demand at the end of last year, because in 2020, conversely, we saw a lot of foreign appetite. So I think now that the market started to pick up, what we find is that the domestic, certainly the local operators who are a lot faster to move, now that there's traction in the marketplace, they're jumping in, they're getting in on the game. So lastly, I want to talk about the office sale market, which had a huge quarter with $3.5 billion in sales. This is over quadruple the dollar volume that we saw in the previous 4 quarters with 14 sales. The cap rates have really stayed consistent here in the mid 4 cap range. Price per foot on average was just below $1,000 a rentable foot. So last and most importantly, we are watching closely the return to office figures. Avison Young tracks this through our Vitality Index. And what we do is we take anonymized cell phone data and we look at the physical occupancy of office properties, among other industries, and we compare them to pre-COVID 2019. So happy to report that at the end of last year, we had some really strong momentum with the return to office. In fact, New York had the 3rd best return to office out of all the cities that we track in the US, only behind Boston and Austin. And we did have a little bit of a setback in January with Omicron, and so we're hopefully going to be back at it in February with the return to pick up with the momentum where we left off.